2 o'clock podcast. I got my co-host Matt here. He's
What's up?
eating some food, snacking a little bit. We had a cancellation and then a reschedule, and we're still waiting for Jonathan to come in the room. So we'll just wing it for a little bit, and hopefully he pops in here. So what's new with you, Matt?
I don't know. I made a post about this today. I'm just like really sick of these. I don't know, just the way some brokers market commercial investment properties is just kind of appalling. I think that if residential agents did the same things, I think that they probably lose their license or get sued. So no, I just made a post about that. I was underwriting a property in Arizona with my group of students that, my students are looking to graduate into larger commercial deals. They're usually people that have residential experience. And this deal was just like the rent comparables were selected based upon like convenience to matching whatever thesis the broker had on the income. And so it was just kind of cherry picked. And when you looked at the rent comps directly around the subject property, which there was 5 of them that I pulled, the average rents for 2 bedrooms were $900 a month. But the comps that were pulled in the OM from the broker were $1,500 a month rent comparables. Yeah. Okay.
It's insane.
And also, now looking at the rent roll, those properties had, they were $1,500, they're under contract rent to $1,500 a month. But on further glance, I looked at the rent roll. There was a lot of tenants that had 0 security deposit, partial security deposit, like $250 security deposit. So I could tell, I was like, okay, they couldn't rent it at market rate to qualified tenants. So the only concession they could have was, and I used to do this before and worked in larger complexes, no security deposit, no application fee. Mm-hmm. And it's just like the tea leaves are so clear that like they just filled it up with a bunch of junky tenants up to 90% occupancy so that somebody could come in and just get agency debt on it, some sucker. And so, yeah, it's just something that is just like, I know you have a job to do in marketing a property, but like you don't have to do it that way.
Yeah. Were you able to see a T12 or maybe some tax returns to prove that this was total BS or not really?
Yeah, I looked at the T12. The other thing on the rent roll was that there was a lot of newer residents. Okay, so not a lot of long-term residents or anything like that. And also on the T12, there was like a lot of late fees charged on at the properties, which gave me the indication that like, okay, this is like filled up with a lot of tenants that just aren't paying on time. Pay. Yeah. And the base rent versus what the rent roll was definitely off and not matching in terms of what the monthly rent roll is. So it's kind of like one of those things like, okay, well, just pay us. What can you pay this month? Right. Mm-hmm. Or what can you pay this week? So like the revenue on it was just kind of like screaming to me that on the T12.
Yeah. Well, we got Jonathan in the green room, so I'll bring him in and we'll just start grilling him. Hey, what's up, man?
Hey, how's it going?
Good. How are you doing?
Doing well, thanks.
Awesome. Thanks so much for coming on.
Yeah, absolutely. Thanks for having me.
Yeah, I didn't give the audience too much of your background, so if you want to start, just kind of tell them who you are, how you got into real estate, and where you're from.
Yeah, so Jonathan Cattani, currently live in Salt Lake City, Utah. Let's see, how did I get in real estate? Kind of by accident. I was a stockbroker for many years, about 4 years. So worked in the public sector, worked my way up, worked with high net worth clients. So 5 million or more in assets is basically how we defined it. And really my main goal was, just make sure obviously they were happy. Obviously talk about their current accounts and then most importantly, talk about their outside assets because the main goal was to try to consolidate, as much as we possibly could. And, those conversations obviously lead to outside portfolios, which led to me realizing that the majority of these clients had real estate in some form or fashion. And then eventually led to helping them use their self-directed, because where I was, you could have self-directed 401k and IRA. So, filling out the paperwork as a custodian so that they could invest using their 401ks and IRAs and passive investments. And this is, we're going on probably 7 years ago. So it wasn't quite at the forefront like it is now, right? Where now, obviously we're a little biased, right? Because we're, head first into it. So it feels like it's mainstream, but back then it still wasn't, syndications weren't a big thing, wasn't as mainstream. So I had no idea what the heck, they were talking about. So that led to podcasts, books, Rich Dad, Poor Dad, like I'm sure at least 99% of my guests, I think, probably have their Genesis moment in the Purple Bible. And so ultimately that led to, I left that because I liked the public sector. I actually loved it, but hated the corporate world. So I left for the startup world, a lot of tech startups here in Salt Lake City, kind of in the Valley, and got laid off because of COVID. And was like, all right, the universe is like kicking me off the cliff. Like, it's time for me to go out and figure out what I want to do. I always knew I wanted to do my own thing. So I found a group here, Greenlight Equity, that was buying apartments in Oklahoma City and Columbus. Joined forces with them, helped them scale, from 70 units to 570 in about 9 months. I mean, just a rocket ship. And quickly realized that my skill set had really set me up well to be a capital raiser. So I had just listened to Hunter's book, Raising Capital for Real Estate, and really resonated with him. Was like, man, like I really like this guy. He was very well spoken. And turns out he was just firing up a capital raising mastermind, which of course is what led to you and I meeting Mark, which is Raise Masters. So I was in the first 6 months of Raise Masters, I was one of the first members, probably within the first 80 maybe or so. So fast forward, I started Cattani Capital Group and, did my first raise last year. Partnered with some people. We raised $650,000 for the TechVestor short-term rental fund. And now have a oil and gas deal that I'm raising for. So it's been an absolute roller coaster, I'm sure, as you guys can all attest to. But it's been incredible and been very grateful.
Yeah. What made you pivot into that oil and gas from real estate?
So that's a great question. So I still love real estate, and I don't want to take that away. In fact, I'm about to most likely launch at least one, if not two more deals here coming up, but which will be real estate. Hint, hint, got to join my list to find out. Shameless plug. No, so the biggest thing was just listening to my investors. I don't have a large investor base yet because I am new. My list is about probably about 400 people or so. And so just from talking to my investors, I'm still in the friends and family and like the +1, just getting into like the +2s, like twice removed, basically. And so from listening to them and knowing them and talking to them, they're looking for cash flow. And unfortunately right now in real estate, it's all but dried up. Yeah. Just with everything going on, which, for good reason, right? Distributions being withheld, safety measures, new deals, are sometimes negative levered, if not close. So, you're not going to see cash flow for at least a year, if not longer. And so I am part of another group that's just all it is deal flow. You just look at deals. And this deal came across and it was oil and gas. And I've always been interested in that sector. Like my stock portfolio has always had energy in it, specifically oil and gas. And I've always wanted to get involved in like direct drilling. And that's what this opportunity was. So because it was new to me, I did, deep dive due diligence, had some independent experts review it. and it got the green light and kind of checked all the boxes. And, so we launched it and have been raising for that. That's kind of been all hands on deck for that recently. But now that things, now that it's launched and things are going, it's allowed me to kind of look back at real estate, which is still my first love for sure.
Yeah. What does your staff look like? Are you doing this all yourself, or you got some people that help out?
Yeah. So it's just me now. So my podcast is all production team, right? So that is just literally me pressing play. I don't have to do anything, which really takes most of the burden off. That's really the other time consuming thing that I have. So I've got an assistant who does all my scheduling, outreach. She's also part of the podcast team. Got the podcast team, but Cattani Capital Group is just me. The capital raising for now is just me. Now I do partner. So the oil and gas I'm doing by myself. But I set up some strategic partnerships. So not like, they're not getting a piece of the pie in terms of, like the back end deal that I have set up with the operating group.
Mm-hmm.
But in order for me to launch it, I wanted to make sure that I was actually going to be able to raise capital for it, because it's a bigger deal. It's 100K minimum, 506C. So it's not for everybody by any means. So I wanted to make sure that I could actually raise, any kind of capital for it. So I set up some strategic partnerships with some self-directed groups, IRA custodians and whatnot, some other partnerships with advisors and just different groups that I, knew through networking. So far that is by myself, but what it's made me realize is that probably a little still too early for me to do everything on my own. So for the next few deals, I'll look for partnerships in terms of combining capital.
Mm-hmm. Cool. So what do those partnerships look like if they're not tied into the back end? How are you enticing them to come on board?
So the biggest thing is just them wanting to bring this, offer this asset class to their investors. So they're not advisors, right? So they can't advise. They can't be like, hey, I think you should look at this deal. It's just that if any of their clients come to them or like, hey, I'm interested in oil and gas, they can be like, oh, we've got this opportunity. It's been vetted. So it's basically just that.
Yeah. You're adding services for them to provide to their clients. So you're adding value that way. That makes total sense.
And it doesn't necessarily lead directly to capital, right? It's just like, hey, we've got this here. So.
Yeah, that's cool.
Yeah. So, Johnny, I've been on mute most of the time. I wasn't able to make it in my studio today, so I have a contractor downstairs that's running a Dremel multi-tool. So
I was wondering what that was.
Okay, so if you can hear it while I'm talking, just let me know. All right. First question is, we interviewed Jeremy Newsom a couple weeks ago, right? He's like a basically stock market evangelist. Now you came from the field, but kind of like, then gravitated towards real estate. So how is it sort of like balancing the allocation of both of those things? Because I'm pretty sure you probably haven't sworn off marketable securities and Wall Street instruments as a wealth creation tool. So tell us about that kind of dichotomy between how you balance the two of those.
Yeah, that's a great question. And that is kind of my biggest platform right now. Is help people understand, like you said, the dichotomy between really the public and the private placement world. And the biggest thing for me that I talk about is it's not to say that you can't get wealthy or rich, for lack of better words, in the public sector, because you certainly can, right? Certainly if you're a high income earner, you go put your money over there, it's going to grow, right? But when you look at it over a long-term basis, there's two kind of main variables that I look at. It's variability, right? So, the ebb and flow, for lack of a better word, of both market cycles, right? we happen to be in an ebb right now, kind of a valley. I do believe the market has turned bullish officially, back to a bull market, but certainly not at its peak levels, right? And so when you look at the variability, I'm trying to remember because I wrote a blog about it, but I believe the volatility index for comparing real estate, specifically commercial real estate, to the public sector, I believe the S&P, was using the S&P 500, was about 6.6% volatility compared to like 1.6 or 1.8% in commercial real estate. So a lot less volatile. And this was over a 20-year period, right? So by no means just like some little stretch of a year, a couple of quarters. It's over 20 years. And so what I tell people is that, wealth is really created in the private world, right? You think about not only the opportunities that you have to create, cash flow and invest in hard assets, and that's all great and amazing, but you even look over at the tax incentives, right? And the tax incentives that are available in the private sector are really outweigh the public sector. It's not to say that they're not there, because they certainly are, right? But in terms of, I don't want to make it too blanket of a statement, but at least for me, I'll say never have I seen anyone who's not paid any taxes, like legally not paid taxes, because of the public sector. Let's put it that way, right? Versus the private world, where you have people who, they're professional passive investors, and they literally don't pay any taxes, right? Or very, very little. And some people even none. And so when you put all of that together, like my portfolio has shifted far more into the private sector than the public sector. Now, that being said, it would be crazy not to play in the public sector, because you look over 20, 30 years and the growth is there. And, I was at a thing, I got a good friend and investor who is a financial advisor, wealth manager. And, they have this thing set up with Goldman Sachs, where you can leverage your portfolio and go get a line of credit through Goldman Sachs, right? And it's a pretty sweet deal. Like it really is. And, so I was in the presentation, and they talked about how if you miss like the 10 over the last, I think it was like 20 years, maybe 10 years, if you miss the 10 best days in the market, then your portfolio gains were down like something like 12, 15, maybe even like 20%, just from 10 days, right? And ironically, 8 of those 10 days, I believe, were all during a recession, which is pretty fascinating. But so ultimately what I'm saying is, you'd be crazy, like, and I'm not an advisor, but in my opinion, I do believe that capital preservation and growth are very, very achievable in the public sector. And, I have it there for that exact reason, right? Long game, like my day trading days are over. It's very much like set it, leave it, and just let it grow. And that will happen, right? I mean, all the data points to that. But in terms of like building wealth, in my personal opinion, it's more in the private area, private sector.
Yeah. So a little follow up on that, because like the reason why I asked that is because like I'm in a position now where I'm still the key person in a lot of our deals. So I have to have a balance sheet of that's got some liquidity on it, growing over time as you do larger and larger deals.
Totally.
So I've been basically, I set out the goal to become liquid by $1 million in 12 months by shedding off some of my smaller multifamily assets that I bought a long time ago. Just so I can have that balance sheet that our lenders want to see, so I can keep, growing the portfolio. I'm in a different space than you guys. Like I don't bring on KPs and that sort of thing for agency debt deals. So that's kind of like where I'm at the dichotomy. And so I am, I do have a facility set up just like you were talking about with Goldman, a securities-based line of credit with my broker, and they'll lend up to 80% loan to value of the actual holdings on there. So you don't have to sell securities in order to invest in real estate deals. So I kind of have that as like a tool in the back of my pocket, but it's definitely really like difficult. Like a lot of people are kind of like one way or the other. They're not like in both. And I'm kind of one of those people that, I'm not the typical real estate investor that like swore off the stock market and basically don't have anything that's in stocks, bonds, or mutual funds. I think that there's a balance between the two of those. So I don't know, kind of how are you balanced between the two of those? Do you have a science behind that, or is it kind of like just by feeling based upon market cycles?
Yeah, that's a great question. So it's not so much, I'm a big fan of diversification, right? But you can't over diversify. So I want to preface with that. So for me, I would say that it's tough because, like for you, right? The security-based line of credit, that is, you can go get that done and you go sit down with them. They look at what's in your portfolio. Maybe you reallocate some stuff to, depending on your securities, right, determines how much they'll loan. So maybe reallocate some stuff, make it a little bit more lendable so you can get that 80%. I think like money markets, they'll even do up to like 90%, something like that. But so, I like the public, right, in the stock market for that reason, because I can call them up, go get, 80%. I can even just go straight and get margin, like today, right now, And so for that reason, I think it's important to have a portion of your portfolio there. Now, the science in terms of how much you want to put there, that's the $1 million question, right? To me, it's the goals. For me right now, I'm probably like 20% in the stock market, maybe a little bit less, but that is a little bit more due to the fact that I did have to sell some securities in order to kind of cover some business costs and some things when I was getting started and also on top of that, I wanted to start building cash flow. So I actually am about to put a post out today about this. For some people, if your goal is not like, you think about high income earners, right? Doctors, attorneys, some CPAs, engineers that love what they do, their goal may not be cash flow, right? They may not want to be like, oh, I want to replace my active income as soon as possible, right? I think of my stepdad. He's been a dentist now for 30 years. He has his own practice, very successful, absolutely loves what he does, knows he wants to work at his practice for at least 10 more years. Okay, well, to that, then I say, you're not in a big hurry to replace your active income, so cash flow may not be your goal. For me, though, to bring it back to your question, for me, cash flow is my goal. I want to get as much cash flow as possible, as quickly as possible. Now, obviously, strategically. So for me, I'm more heavily weighted. Also, just starting out, in order to raise capital and make my investors feel more comfortable, I'm going to invest right alongside them in all of these deals. So because of that, I've had to liquidate and set capital aside and put it into these deals. Now, whether or not that continues, forever, probably not, because eventually I will run out of capital, and we're not liquid when you're in the private sector, right? You got your 3 to 5, 7-year hold. So eventually that liquidity will run out. So to bring it full circle, for me, it's not as much there because I'm not a KP. I don't need liquid as much, but ultimately, once I'm able to kind of reallocate my portfolio, a couple of these deals go full cycle, that will shift in order to take advantage of the growth and capital preservation that the stock market does give you, as well as the leverage and easy access liquidity that you get.
What happens if the stock values go down and you do have one of these like 80% loans or lines of credit against it, and you're using that line of credit? And then the other question is, does the bank take that line of credit, or do they actually want to see liquidity as the KP?
That would be a better question for Matt. I can answer the first one. So the first one, it depends on the securities in your account that determine what your loan to value will be. Like I said, very safe things and liquid things like a money market, right? That doesn't really ebb and flow, right? It's really based on interest rates. At least the presentation I went up to, they said they'd loan up to 90% on that, right? Because that's not going anywhere. Now, you've got bonds, right? Treasuries, those kinds of things. Again, they'll loan on that because that's, there's no guarantees. And when I was going through my Series 7, they said there's no guarantees in investing, but you can almost always bank on the U.S. government. So, that's why, as people get older, they start moving towards fixed income treasuries because, they don't have the time to make that capital back. So if you have a speculative securities account, you're not going to get a lot of leverage, whether that's margin, whether that's securities lending, whatever it may be. Those would be like new IPOs, certainly pink sheets. I don't even know if they loan on pink sheets. I highly doubt it, meaning stocks that aren't listed. You'd be surprised how many people trade in that part of the market, which is still the wild, wild west. It's more than I care to say, but so it really just depends how your portfolio is allocated, right? If you're in all your blue chips, right, your Apples, your Tesla's not that lendable, at least the last time I was paying attention, just because it is so volatile. It was only like 60% when I was a broker in terms of like getting margin, but stuff like Apple, Nike, these other blue chips that just really, you can kind of count on them doing, keeping the same path. They're the ones that will get you the most leverage. So it really just depends. But the KP one, that will probably have to be up to Matt to answer.
Yeah. So, Mark, I have a pretty stodgy portfolio. So it's mostly like total market, like S&P indexes and stuff like that. So I get up to 80%. Now I have it with a smaller community bank, which is where my account is. Okay. So when I have had a market correction that has tested that 80% loan to value, I've gotten like a kind of like, hey, Matt, just so you know, we're kind of like in a little bit, danger territory here. We're not going to force you to sell securities to make up the margin, but just be advised that we may have to do that. Have they ever had to do that? No, because my portfolio is diverse enough in terms of being spread across so many different industries that, like through basically the total market stock index fund, that the only time that a market would dip by like, let's say 10% or 20% is like when you have something like in 2009 stuff like that. So,
yeah. Mm-hmm. Right. And they do, like when you do a securities, you'll want to talk to your advisor, right? And everything if you're going to look into this. But they do, at least when I was at the presentation, you do sign over and give them the discretionary right to liquidate in order to cover. Now they give you a warning and give you a heads up that it might be coming, right? And give you every opportunity to either bring in new funds, sell what you want to sell, right? That's another big thing. That was one of the biggest points of contention for margin when I was a client is, if you don't make a move, we're going to make one for you and we're going to sell whatever we choose. And I mean, how many clients we sold stuff that wasn't what they would have sold. And it's like, well, that's your bad, So it really depends. But the other thing too is, if you're thinking about using it to invest, you want to be very, very cautious because, if you invest in something that's not liquid and a call comes due, you can get into some hot water. They told us a horror story of some guy who used it all to invest in Bitcoin and went to zero. They basically had to like liquidate his whole account. So, there are some things you can do. Some of the better things are like down payments, right? Stuff that's going to come back to you pretty quickly that you can just replenish. But they present really good opportunities. I mean, there is such a thing as good debt and good leverage, and you see it all the time in the private world, right? That's how things are. That's how large assets are purchased. So I am not debt averse. It's just, it's got to be, thought out and used correctly.
Yeah, that makes sense. You jump in, Matt?
Are we losing? I think you muted.
You're on mute.
Oh,
Uh-oh.
technical difficulties. Stand by. He's like, this is what I get for not being in my studio. Yeah, we got you.
We got you.
Okay, so this is my follow-up. You mentioned, Johnny, posting something, right? So
Yeah.
are you active on different social media channels? And if yes, how so?
Yeah. So this is an interesting point that I've been having a lot of journaling and discussion internally with myself on. And as extroverted as I am, and as comfortable as I am sitting right here in front of the camera, recording my own podcast, I do 2 solo episodes a week. For some reason, when it comes to posting on social media and strangers seeing my stuff, I'll be the first to admit it scares the hell out of me. And so instead of trying to be like, okay, how can I make the best content ever? Right? Like, you look at, and it can be intimidating, right? Because you look at some of these people, you look at like your Cody Sanchez's, your Alex Hormozzi's, right? Some of your other influencers, just outside of, entrepreneurship and business. And they have like sick edits and like, amazing cameras and all this stuff. And they got a whole team. And you're like, well, what the hell am I supposed to do with my iPhone?
Yeah.
But the reality is you're never going to get to that point. You're never going to be Cody Sanchez until you start recording on your iPhone. So I've started this thing now that I've been doing. Today is only the 3rd day, that I call walk and talk. I've got a dog, got a 10-year-old black lab. We go for a walk every morning. So what I've started doing is recording a 60 to 90 second video of just whatever. The first day it was like about taking action. I told a story about a good friend of mine who's, kind of fed up of the 9 to 5 and is kind of starting a thing going into e-commerce. Yesterday I talked about, my take on work-life balance and how I don't believe that it exists. I think it's far more heavily weighted into the work category. Today's was on kind of the point I made earlier about defining your goals, right? Like, I think the number one question I get asked from new or potential investors is, where do I start? And it's like, well, it's like anything. You want to define your goals specifically, right? What it is you want to accomplish. That's why I talked about, people are like, oh, I want passive cash flow. And it's like, okay, well, do you want to replace your active income as soon as you can so you can be out of your W-2 job? Or do you love what you do? Right? So for me, what I've started to do on the social media front is, okay, that's easy. I'm already out walking, right? I already got my headphones in because I'm usually listening to a podcast or a book. So why not take 60 to 90 seconds on that and just give my take on different things? And every time something comes up, I've got a section of my notes. I just write it down. And so for me, that's what I've challenged myself to do is like, okay, this is a really great start. Now I know that eventually that'll get old and, people are going to want to see different things. And that's, I totally get that. But for me personally, in order to get to the point where I feel comfortable to expand and do some of these other things that really are outside of my comfort zone, I've got to start with what I can do. And to me, that's very simple. You record it on your iPhone. It's already in the format of a reel and a TikTok and some of these short form videos. So it's super easy to just spread it across every platform. So that's what I've been doing. So my main focuses in terms of platforms are Instagram, Facebook, and LinkedIn. Because of the format of the video, it's easy to go and put it on TikTok. So I do go and put it on TikTok as well. Not as concerned there. Gen Z, some of them are certainly getting to the point where they're high income earners, can be investors. I mean, some of these influencers and content creators are making millions of dollars a year as young 20-something-year-olds. But are they at the point where they can understand what it is we do? Maybe, right? May as well put it out there and see, but not as concerned, more focused on Facebook, Instagram, and LinkedIn, because that is where millennials and above are active. And that's where I'm going to get through to really the people who are ready to invest now, whether that be experienced investors or people who have, started to get the ball rolling in terms of looking into it.
Yeah. So you've been doing it for 3 days, right?
So I've tried a ton of other different formats.
Mm-hmm.
Like if you went to my Instagram, you'll see like I've posted over the last probably year different styles. One style that I tried a lot of was literally sitting right here, where people look like they're on a podcast, right? And it's like right at the side of their face.
Mm-hmm.
I'm going to be 100% honest. Like, at least for me, that's staged, especially as a host. I don't really talk that much, right? You just kind of do some color commentary here to kind of keep the conversation going, but really you're highlighting the guest. And so I didn't really have an opportunity to do it. So I would just set up the camera, put on my headphones, just like you're looking at right now, light, studio, everything. And then I would just talk as if I was on a podcast, but really I was just recording on my iPhone and put that out there. Turns out that's not really authentic to me. I'm a taller guy. I'm 6'4". My voice carries. So it feels a lot like I'm talking at you. And that's not how I want to be portrayed, because nobody wants to be talked at and told what to do by some kid sitting at his desk. So it's a lot more authentic for me, right? This is just me. For some people, it works great to do that style. But for me, it's so much more authentic to be walking and talking. So that's what I do, right? And that will expand and we'll get to other forms and different things. But so to answer your question, I've tried different ones, but what feels the most authentic to me and I feel most comfortable putting on social media is this walk and talk, at least for the time being.
Yeah, no, that's awesome. I mean, I found that I used to like post on social media once a week, and then I hired a coach that is their thing is coaching people to be better at social media, and they're like, hey, if you want to make a habit of something, then do it every day.
Yep.
And then if it becomes a habit, then it feels weird when you don't do it. Because and I'm always trying to bolt on a new habit, so it's like. And when I don't know, first it starts as discipline and it's weird. And then discipline turns into habit. And then a habit is just like, basically it's like brushing your teeth in the morning. You feel really weird leaving the house when you didn't brush your teeth. And the same thing is with like the habits that I've associated with that are kind of habit part of my business. So no, I really think like daily is a good thing. Keeping it under 60 seconds is probably great, because it drives me nuts, man. Like when something gets like really great engagement that's between 15 and 30 seconds, like I'm such a slow talker. Like there's not even like, I can't even get a few words out in 15 seconds. Right. So I know I've been experimenting with all of those things, and now I've sort of like been doing more 60-second, video content. So yeah, I was just curious about that. I know that Mark has definitely been doing copy and more social media and stuff like that. So what are you finding out there, Mark?
I need to be more consistent, like you guys are saying. I'll be really good for a while, and then I'll kind of like start to lapse, and then I realize, I'm only posting once or twice a week. And I think I do a lot better when I am being consistent, because then I can kind of build daily and I can get that feedback from the previous day. And I'm also more engaged with other people's content, which I think is huge, versus like hitting it a couple times a week. You're just going on to get something out there and you're not really participating in the conversation with other people, which I think is the key to the social media, is to make sure that you're actually engaging with other people's content.
I'm so happy you said that, because, there's some people out there who, for instance, like Russell Brunson, love Russell Brunson, everything he talks about, right? Everything he touches turns to gold. I use ClickFunnels, absolutely love it. but he talks about how he's not really a consumer except for like, only a select few people. And it's like, well, the irony of the algorithms, especially now, I know for sure for LinkedIn, and I know Instagram and those are the same as well, is you've got to engage. You've got to leave comments, engage on other people's content. And the algorithm will recognize that, and therefore your content, right? Like gone are kind of the days of when you post, right? If you're like, okay, I've got to post every day at 9 and then again at 3, that is gone, which is kind of nice because you don't have to worry about scheduling as much. Not to say that you can't still schedule, because, there are people who, all they do on Monday morning is take all of their content and schedule it for the next 2 weeks, maybe a whole month, whatever it may be. Right. But so I'm not saying you shouldn't pay attention to that, but it's really about the consistency. For me, once a day, I think is great. Especially starting out, like you said, Matt, you really make it that habit, and then it feels weird not doing it. Like I already feel so comfortable with the walk and talk that I look forward to my morning walk so that I can be like, okay, what am I going to talk about today? And I'm only 3 days in, so that's kind of nice. But yeah, you've got to engage with people. And admittedly, LinkedIn is where I struggle the most because, like, no offense to everybody on LinkedIn, but you guys need to stop posting 18 paragraph like blog posts for your posts, because like TLDR, you know what I mean? Like too long, didn't read. Sorry.
Yeah. I'm guilty of that. And when I'm seeing other people's too, I'll open it up. It's really long. I'll like skim the top part, skim the bottom part, and then like write a comment, because you can pretty much pick up the gist just in the intro and the exit.
So Johnny, what I was going to say is that the first time I ever did a walk and talk, and I think this was probably 4 years ago, Mark, was I was walking down to one of my buildings where I had a bunch of protesters out in front of the building because this was a building that I bought, it was like 30% vacant. And I know it was 30% occupied. And the remainder of people that were living in there were they're all junkies and crackheads essentially. So, I mean, I had to boot them out. There's no salvaging there. So then I had like all these protesters out there. So I did a walk and talk down there. I was like, hey, I'm going to my protest. So I was like, this is pretty cool. I'm getting a good stream of consciousness out there when I'm walking. So awesome. Love it.
The evil landlord.
Right. I know. And it's becoming more prevalent with, people hating landlords.
Yeah. I think that, I think the historical landlord, kind of gets a bad rap. Like we're talking about like the Joe Pesci, like super, type of thing. But I mean, I just think that to throw the baby out with the bathwater and just lump everybody into one category is just so not fair. And it certainly isn't like and we've done this with several professions recently. I'm not going to name them, but there's definitely a cultural problem that happens and now we have like shortages in these categories like that, where people just got too abused and they're just like, F it, I'm not going to do it anymore. Most namely teachers, for instance. My wife is left school. She couldn't take it anymore. So yeah, I mean, I think that we just need to get like more responsible about like how we use language on both sides and how we characterize things, because like, the world doesn't consist of like the Snidely Whiplashes and the Dudley Do-Rights of the world. Like, people walk around and they wear varying colors of gray hats. So, and then just to like label people black hat or white hat is just really kind of like unintellectual and irresponsible.
So one platform that I want to start pushing for, and this will come with time, and I've been kind of planning it out, because for me, it's really like, and this is for anyone, right? You need to add value way before you ask for anything. So I don't have any call to actions in my posts or anything. My automations, I've rid of call to actions, especially early on. Right. It's just value. But one thing I really want to push for as I start to get a bigger platform is I'd really love to see us highlighting, instead of this cancel culture and like, look at all these things that are wrong, right? You look at like, oh, bad landlords. And, you know, as a single man, you look at like, oh, I hate men. Like, look at how, you know, crappy men can be in the dating world, blah, blah, blah. What if we started highlighting the good? Look at how good I'm being treated as a tenant by this landlord. Look at how good, you know, let me tell you about a really good date I had with this awesome guy. I can tell he's a great guy. Like, you know what I mean? So instead of this like negative cancel culture, we just start highlighting the good, you know. I don't think it will catch on, but I would love for it to, because I think that positive affirmation goes a lot farther than the negative, because I think what you end up getting with the negative is you get too many people afraid of like messing up, being the bad landlord, that they don't get involved at all. And it makes me wonder what we're missing out on by people being too afraid to highlight something that they're good at, whether that's business, right? Being a landlord, whether that's, you know, being, you know, an emotional, sensitive man, or like an artist, right? Who maybe we're missing out on some art because they're too afraid that, you know, someone won't understand their medium or whatever it may be. So I don't know. That's kind of a tangent, but I would love to see where we start highlighting some good. And, you know, I think if once you start highlighting good, that will kind of catch on. But I don't know, the cancel culture is very strong.
It is. You need a new platform.
Seriously.
Positive vibes only.
That's right. Because there are a lot of great landlords out there. I mean, there are a lot of really good operating teams, a lot of good property management companies, you know, so.
Yep. It's impossible to make everybody happy, though. That's the problem.
Correct.
And most people would rather just complain than, you know, give somebody accolades. You got to go around and beg for those good reviews.
Yeah.
So I want to ask you both this question. Yeah, I think Johnny will have to have you on it for part 2, because this has been really, you know, really engaging banter and stuff. So, but I have to ask about the subject of networking. I know, Mark, you do networking, like like belly to belly in-person network. Johnny, do you do networking as well?
Oh yeah. Yeah. That's my specialty.
So what's your sort of like process for effectively networking? The reason why I ask this is that I listen to the Bigger Pockets podcast, and I have a post coming out tomorrow where I put Rob Abasolo and David Green on blast for what they said in terms of networking. If you go to a networking event with the 200 people, your objective is to meet all 200 people. And if you meet somebody that doesn't meet like what you're looking for, they just say goodbye and move on, and boom, boom, boom. And I was like, so I had to challenge. I was like, yeah, it's good to network with intention, right? If you see somebody that's an organizer of a group, like, and you're like going to some place looking for something very specific, like go to that organizer who like loves being that super connector and say, hey, my name is Matt Druin. I'm a real estate investor. I'm, you know, I love this group. Like, who do you know that like does this or has that, or who could help me with this? And they can love to like introduce that to that person. So you can make that one like friend. So what's your science behind networking, Johnny?
Yeah, that's a great question. And I am very passionate about this exact topic. I absolutely agree with you that what they said on Bigger Pockets is, I dare say, wrong. I think, especially for the average person, it's very, you know, even I, as an extrovert, get overwhelmed when there's 200 people in a room and I'm like, all right, where the hell do I even start? You know what I mean? And so for me, my goal is that one good connection. Literally, that's it. And so what my focus is I love your thing of going and talking to the organizer, right? I think that's so important to know someone. Shout out to Adam Carswell. Adam Carswell knows literally every single person in any, like, I always tease. I'm like, I don't need to know everybody. I just need to know Adam. So that is a very, very effective thing to do, right? Because it's extremely efficient, because you don't end up having to weed through 50 people and hopefully one of those 50 is the person you're looking for. When you can go talk to someone who knows majority of the people, you can be like, hey, this is what I'm looking for. Who do you know? Boom, they can just point to that person, go talk to this person. And that works very effectively. And then you're in. And that's your one good connection.
Yeah.
Well, technically two, right? Because you connect with the organizer and then, you connect with that one person. So for me, my goal every RIA I go to, in-person event, conference, is just one connection. Now, you're going to talk to a lot of people. Ultimately, you go to a 3-day conference, at least for me, I don't sit still very well. So I don't sit through a lot of talks. I'll go to like the big names or a topic that I really want to know more about. But you go to enough of them and, you start to see some of the same names. And obviously they're very, very knowledgeable on their subject, right? It's not to take away that you shouldn't be seeing the same names. It's just that if you've seen them talk on that subject before, it might be a good opportunity to go out into the main lobby and network. So for me, what it comes down to is being a good listener is like the number one skill in networking. And I talk to people about this all the time. So many people hear, right? We all can hear, but you don't listen, right? You hear someone talking, but you're not listening to what they're saying. So the biggest key is listen to what they're saying, because two things can happen. One, if you're a good listener, you might be the one that connects them to the person they're looking for.
Mm-hmm.
And I've been that. And that is just as satisfying, if not more satisfying, than finding the person you're looking for. And two, by being a good listener, you can respond. You've created a genuine connection, and then they can help you potentially, right? So ultimately, you're going to talk to a lot of people. It's important to help people understand what it is you're looking for, and maybe they know someone. But, you're going to get a lot of cards and a lot of contacts. But ultimately, for me, it's just about finding that one person. Once I find that one connection of whatever it is I'm looking for, whether it's a future partner or a new operator in a certain asset class, whatever it may be, that's the one where I'm like, okay, this is gold. And then once you find it, you've got to follow up, you guys. I think this is the number one place where people miss is you talk to so many people and you've got a stack of cards, right? Or you've gotten a bunch of, digital contact cards and you're like, I don't remember this person. And that's okay. It's going to happen. Like I think, I don't know if you find anyone who can remember everyone. I can't, but for me, it's just the follow up. If you meet the one person, follow up with them. Hey, let's get on a call once the conference is over and the dust is settled, right? Within the next week, you want to be on a call with them and further that conversation. If you find the person you're looking for, don't dominate their time, right? And be like, okay, we're going to learn everything and we're going to solve the world's problems right now. No, realize they're the person you were looking for. Great. Get their info, boom, follow up, and then allow them to move on and so on and so forth. And I think too many people try to hold court and you can, it can rub people the wrong way and you end up maybe burning something, or you just have dominated someone too much time. So sorry, long answer to a short question.
Yeah. No, that was great. I agree 100%. I think, when you're meeting people, I give everybody as much time as they require. Some people are a little bit more long-winded. They like to talk a lot more. And I'm constantly engaging and asking questions. So I'm not usually the one that's going to like break it off and run to meet somebody else. I'll kind of let it organically end. A lot of times they might be like that power person you're talking about. They're only going to give you a few minutes anyway, and then they're going to run off. You'll also have those people that maybe their egos are a little pumped up and they really don't give you much at all. They're just kind of like a little standoffish, which is always bad. But I like finding the people that I call like the mayors. And, we have it in real estate too. So like I'll find it in a neighborhood. The mayor of the neighborhood knows everybody, knows all their business, and they can make those introductions. I find that there'll be a few of them at networking events, and they really know their sphere very, very well. For the last FRIA meeting that I was at, I ran into one of those gentlemen, and he was immediately he gave me his card. I didn't have my card on me, so he was immediately following up with me. He was following that script, and he knows everyone. And so you have a few of those in your arsenal, and you can then continue to make connections even outside of your networking. It's just unbelievable.
Yeah, completely agree. And I want to say, like, when I say finding the one person, to me, it's not necessarily like, oh, who can help me get ahead. It's just that, I don't know. For me, it always feels like there's one person who stands out in every conference I've gone to in terms of a new connection that I've kept up with that has led to something, whether I know someone they need, vice versa. I've got information they need. Like, I don't know. I hate to say like you're just looking for one person and nobody else matters, because that's not what I'm trying to say. It just feels like every time I've gone to something, I've made a single connection that's led to like a furthering the relationship.
Mhm.
And that is very different at each one, right? Sometimes it's a potential partnership, new operator, maybe a new asset that you wanted to learn about. But I don't know. It just always kind of felt that way for me.
Yeah. And if you don't do that follow-up pretty soon thereafter, you're going to lose that connection. They're not going to
Correct.
remember. And then it's almost like when you do want to resurrect it, it's almost like a salesy thing, right? It's not like it should be had you had that immediate follow-up, got them dialed into you and you dialed into them. And then, maybe the next interaction is 6 months down the road, but at least you had the initial contact, you had the follow-up, and now it's warm and it's not cold.
Correct. Yeah. And put a reminder in there too. Like, a lot of people take selfies with people, and then you can send the selfie with it.
Yep.
Right. Texting is a
right.
great way. I mean, as a millennial, listen, I love getting on the phone, and you can solve everything in a 5-minute conversation that a whole day of texting will take.
Mhm.
So I'm a huge proponent of getting on a phone call, a Zoom, whatever. But don't be afraid to get a picture, their phone number, send the picture and a reminder of what you talked about, and be like, hey, I'll shoot you an email and we'll schedule a Zoom call. And that's all you got to do. Right. And that's it. Because, like, they're going to go talk to a lot of people too. So like, you're not always going to stand out as the one person they remember. So it's important to be humble and don't be afraid to have to remind someone on what you talked about and refresh their memory.
Yeah. I love the selfie trick, because that way, when you follow up with them, that picture is right there in the chain of the text. And if they don't remember, they will when it pops up.
And for me too, because like, you do that
Yeah.
with, 10, 15 people at a conference, like I'm going to forget too. So.
And see,
Yeah,
that's why
so-
I was just gonna say, that's why I don't like the digital business cards. Like, I think you should have both. I think you should have a physical card and a digital card, because on your phone right now, there's really no way to be like, hey, show me the last 20 cards that I entered, for this particular it's just,
Dude, you might be
there's no-
onto something there though with that. That might be a technology.
Yeah, it needs to happen, where you can almost like have a table where you just throw out your digital cards and kind of scatter them and look at them and add notes to them. And
Yeah.
because that's the beauty of the regular business card. I've got notes written on them. And then when I go back at the end of the day, I enter those notes into my phone, and then I can really make that contact searchable. So it's got all these key things coded into it. I put like where I met them, the year I met them, what their business is, what they're looking for, and then any kind of personal notes I'll throw in there too.
Yeah. So 4 golden words is I thought of you, in preference to, prefacing like an actual thing there. Because here's the thing is that I have this really weird, creepy skill to remember like just the most minute details of a conversation I had with somebody 10 years ago. And so I'll remember like these like little like interests and stuff like that. Like, some dude like, I don't know, is a power lifter or something like that. And then like, 5 years later, like I'll like, come across something like on Instagram or whatever from, and then I'll just like send him a text and like, it's like, hey, I thought of you. Like I saw that, when I saw this post. And, I think in a world where, things are getting dominated by AI chatbots and just things are going to get more impersonal. Like that's like the competitive advantage that you can get in terms of that humanization of a relationship with somebody, and that's what we have as like operators. Cause, Mark self-manages, Mark owns a management company. I own a management company. We manage our own assets. And I just try to drill it into our staff that like, you have like this control over the customer experience that like you cannot get anyplace else. And that's how you add value and keep our customers there, because, turnover is like the number one loss center, like in our business. So you have control over that, and those people will pay more in rent, and I can, and then we make more money. We can afford to give you raises every year. And it just like the thing comes on, I think there's like a huge competitive advantage.
Absolutely. And I really love the push over the last few years about, like coming from the tech space, and I wasn't in it long, but the company I did work for was an absolute rocket ship, ended up getting acquired for $2.5 billion, like 3 years after go to market. So I got spoiled in a sense of I got to see like one of those unicorns, got to experience it. Naturally, I got laid off and, didn't really get anything out of it, but I got some good lessons. And one of them was they took so much care. I mean, the customer success team was like the main focus, right? Like obviously sales was very important, of course, but like they put so much into customer success because there's so many things. I mean, you take it to the tenant level, right? In this business, and you've got free marketing, right? If this person loves where they live and your property management team's taking care of them, not only can you continue to raise their rent and they're like, heck yeah, like I want to keep living here, but they're going to know people and they're going to speak such good words of you. And like, so I really love this push of like, yes, it's important to acquire new people, new investors, right? Like I do want to build my list, but I've got repeat investors already. And I'm like, those are the ones I want to take care of, because they're going to know someone. And if they're a repeat, that means they're going to speak highly of me and what I'm doing and, all of that. So yeah, I'm a big fan of that.
Do you have any events for your clients, like client appreciation events, or are they like scattered geographically and you can't really do that? Or what's your plan for kind of keeping the engagement and keeping the activity and excitement high?
Yeah. So like I said earlier, right now I'm still pretty much in the friends and family. So in terms of like appreciation, like I got my dad to invest and he's looking forward to investing in the next deal. That's an easy one, right? Like I'm taking my like I call my dad right now and take him to lunch. You know what I mean? Yeah. So that's awesome. And I'm stoked on that. No, they are spread out geographically. So that is a bit of a challenge. Ultimately, once I get to the point where like, I've got big check writers, people who are investing, maybe $500,000 or more. Yeah, certainly I would love to do a trip every year with like my 10 best, maybe, right? 5 best, right? Let's say 500K or more a year investors, 1,000%, all expenses paid. Like we're going to go somewhere cool. You know what I mean? Or even just like a nice dinner in like a cool city, right? Something. For now, it's just gifts. So every year I'll get them a gift, thank you card, right? Next year, the gifts will keep getting better for sure, especially the more you invest. That's something I want to look into in terms of kind of tiering it. But yeah, and then oh, there he is. He's going at it.
Oh, geez, I'm so sorry, man.
No worries. But like I want to do a meetup too, and that's kind of a new thing I'm getting ready to launch, is just like an in-person meetup. So certainly that will be some form of that if new investors do come out of that. But geographically, it's too much of a challenge right now to do that. I don't know. What about you? Have you been able to do anything like that?
I've got a lot of local clients, so we have had some events. I tried to do it every year, and then COVID hit, and it kind of like threw me off my game. But we definitely want to get another one. I've done rooftop parties because we've got a nice commercial building downtown that can hold a couple hundred people, probably 300 people on the roof, and so we've had bands play up there, and it's got a really good view of the skyline. And we cater it and have drinks. That's been a success. We did a dance party. It was like we rented a dance hall. And we hired the dancers to come in and like teach my clients how to salsa. And so that, we had it catered, had drinks, and a lot of people just kind of hung up by the food and the drinks, but a lot of people did come down on the dance floor and learn how to do a bunch of different dance moves. So that was pretty cool.
Nice. Yeah. I mean, I tell people this all the time, like free food is how to get me to go anywhere. So if there's food, like if you're like, hey, it's this, topic that I, not really passionate about or don't, care to learn much about, but you say there's free food, like, heck yeah, I'll come listen to someone talk for a half hour, an hour.
Yeah.
But dancing, I actually do love to dance. So that would have gotten me too, for sure. Food and drinks aside.
Yeah. We had a really good turnout.
So Mark, we got to wrap it up, man.
Yeah.
It's
I got another call.
Oh man,
But,
it's 3:05.
Yeah.
Thank you so much for coming on. If you want to,
thank you for having me. Let's do it again. This is awesome.
Yeah. If you want to plug yourself, and I'll drop stuff in the comments for people to get a hold of you.
Cool. Yeah. Like I said, my name's Jonathan Cattani, founder of Cattani Capital Group. Best way to be in contact with me is through my list. Personally, I don't think you can be on enough lists. Like I'll join people's lists all day long, even if I never end up investing. So easiest way to do that, CattaniCapitalGroup.com. You can see it right here behind me, how to spell my last name. Also, follow me on social media at Jonathan Cattani. That's all my social media. Going to start being more active there, as I've said. So that's the next best place.
Awesome. Well, thanks everybody for tuning into this week's episode. We really appreciate your support, and we will see you here next Thursday at 2:00.
All right. See ya. Bye, Trouble Tool Bill.